One of the best hedge-ons these days is CoTu. CoATUEE. CoTu. All right, we got a lot more to do. That was an interesting short report on D-Wave, QBTS.
Yeah, Matthias, we have international coming out very soon. So we will have international stocks days away. We have it live on a development server. Tans, I'm not sure how many people I actually do want to have the source. Like I want to kind of work on it first. You know, this is our product. We may want to sell it as a service more than sell it for, I don't know that we want people to just tinker with it, to be honest. You know, we may want people to sign agreements or something. I don't know. I'm still thinking about it. We've invited a few people to the repo, maybe like 5. But I just want to get my head around what's the right way to do it. I mean, listen, we have customers. We want to give them tools, but I also want to give you good tools. I think it's better to have it as a service, to be honest. But I'm still deciding. I mean, look, I don't think it's ready for production anyway. And I do think you want, like, you're going to need your own broker-dealer to run this kind of thing. So ultimately, it's all going to be a service regardless. And I probably want to keep track of the people we add. We do machine learning. Yeah, if you need to be your own broker-dealer, that's one of the main things you have to implement as a quant. If you can't be a broker-dealer, you got to go get a good deal with a broker-dealer where they'll share your rebates. I don't like OpenBB, and QuantConnect is cool. I think one of the problems with QuantConnect is like you're kind of stuck in a hard place for like these guys. To me, are like Quantopian, where it's like Forex, Coinbase, Bitfinex, Binance. Like I need to know what Wolverine could be good. I think there's room for something like this. I think if you're a programmer, you'll either make your own homebrew solutions and you're not going to want to use a system like this. But there's a niche where this makes sense. And then, so like either you do your own homebrew, which in the long run is what you're going to do anyway. You might get started on a site like that, bootstrap yourself. Or you're really not a programmer and you're out of luck, you know, and that's 90% of people. So I'd rather make the no-code solution. Probably not IC, no. No, I mean, you should be making your own systems. Although, look, I mean, for the right, if you can find service providers and vendors that are good and they're affordable, you know, why not? You know, it's about making money at the end of the day. So there's not too much slippage. For small amounts of money, I mean, you're pretty much there. I think time to tick is kind of your biggest issue. Investing in private equity is pretty difficult unless you got a lot of money. I mean, I haven't really been talking much about HIMS. I mean, there's not much to talk about. You can't focus on just one stock. You gotta find the best ideas.
You can make compounded doses. If somebody needs a half a dose, you can compound that. Now, the problem with that is you generally have to charge more than list. You know, so if I show up and I say, I'm special, doctor, I need a weird dose of semaglutide, that is literally what compounding pharmacies were made for. The problem is they have to buy semaglutide. They compound it, hence the compounding pharmacy, and they send it to you. What usually happens in the compounding pharmacy industry is you have this insane price point. So they can't use like some weird off-brand, you know, or like research chemical. They have to, you know, buy prescription semaglutide. The doctor has to write a prescription for prescription semaglutide. They have to order the vials to the compounding pharmacy. The compounding pharmacy has to dilute it or do whatever. And then they have to get reimbursed, which isn't exactly easy either. And usually for the compounding pharmacies work, they charge a huge amount, and it's basically a huge grift, compounding pharmacy. I had to deal with this myself, and I'll talk more about it in a second. Exactly, T-Sizzle, exactly. But again, I don't know that that's what they would do because I don't see the profit in that, right?
I hate this company. I really hate this company. I like their old CFO. Everybody liked him, though. Reflexio is doing well. 𝗟𝗏𝗪𝗔𝗍𝗔, excuse me. A virus? I mean, you need a textbook? Go read a biology textbook. How hard is it? You want me to show you some good ones? They're doing well with the new migraine drug. Pfizer's out of the GLP game right now. There's plenty of oral GLP-1s. They're a dime a dozen. Pfizer just announced they're stopping theirs. The last bag holder. I love you guys. The last baggie. Came so far, I traveled so wide, I found quantum computing. I take the cassava drug. Rinvox's been approved for 80 different things. Yeah, I've been in Baggieville. Here to tell you all about it. I gotten bagged so hard, I was in the supermarket with these bags. Paper or plastic? I was acquitted of pilfering, thankfully. I would have gone to jail for a long time if that was true. It was all a lie. Ullman Capital? This is you. Is this you? Oh, you want in next, Corn Cob? Real estate guy? Really? For your salesman? Go meet your quota. You a high society guy? Oh my God. Go sell some property. It's all right. You'll get somewhere someday. Are you the only person that works there? We look very similar. I'll give you that. You're in Ventura Boulevard, the place of serious business. Matthews Real Estate Investment Services. Did you get fired? Is this fake? Fake news? Yeah, you're out? Yeah, I'm sure you did. Are there people who've made real money in real estate? $1 million properties? Jesus Christ, come on, dude. You gotta be trolling at this point. Yeah, that's pretty cringe. But you gotta start somewhere. I guess it's okay for early in your career. No, Max, no. Unfortunately, no, you got a ways to go. You got a little ways to go, buddy. Problem with real estate flippers is they're basically beta bag holders at some point. Philip, if it's a low margin business, it could be very low. If it's a high margin business, you can tolerate it being very high. So it's not a really rational question if you think about it. No, Spur Buffett's not a bag holder. Bloomberg was LinkedIn before LinkedIn. I've always wanted to get into technology. I looked into IonQ, D-Wave, other industry leaders. I decided I'm getting into quantum. If Charlie were here, he'd stop me. There's young Buffett and old Buffett. They're all different. Quantum Computing Inc. It's kind of a shell game. But I'm the shell, I guess. Let's run it up, boys. Full send. Look, everyone has to start their career somewhere. And look, you can make twists and turns in your career. It's not where you start. It's not where you're at now. It's kind of where you finish. And, if you're enjoying the ride, that's what matters. You're doing well. There's no reason to roast anybody unless they want to smoke. Yeah, look, PayPal's just like a classic value stock. 10 times earnings. Solid business. Not going anywhere. Probably a value trap. Oh, nice. Datroway. It's approved. TROP2 ADC. This is HER2 negative metastatic breast cancer. Very nice. Second ADC approved for these guys. There's also so many drugs that are interesting that I'm paying attention to. Akiro's drug, AKRO. I should do some cold calls. Been slacking. The problem with pharma is you really can't predict the long term that well. Because you don't know what's in the pipeline. There's no differentiation between management. Whereas you can look at Zuck and be like, all right, this guy's going to figure it out. It rarely happens in pharma. AstraZeneca, Pascal's the guy. He's the only manager in pharma worth investing in. Take that to the bank. Well, hold on. 𝗩𝗏2. AbbVie's very good. So big pharma is kind of tricky because sometimes one hit drug can carry the company. But you have to figure out if there's some repeatable process there, and there almost never is. Even Regeneron, who had the hottest hand for a long time, gone so cold. Their pipeline is just trash to me. They could have been a contender. I could go public, but listen, now's not the discussion for this. Oh, Joey, I probably could. It's just not the right time to discuss this matter. I like software. I'm happy doing software. Pharma's really tough. Yeah, Regeneron was the GOAT for a while. Long time. I don't have any specific thoughts on Sun. I try not to trade the Indian stocks, but I will look at it at some point. There's readout delay risk, of course, but is this for real? Wow, look at Eyelea sales. Ew, is this some kind of joke? GameStop's he's not doing any acquisitions. Where's the deals? Supposed to be a deal guy. I need to see a deal, buddy.
Supposed to be so good at making these deals. Make a deal. Oh, Eyelea down 39% year over year. Rest in peace. Is the stock market literally a Ponzi? No. The phone number is on the screen. 608-830-9900. Anybody want to call? The number's there.
Hey, hello.
Hey, Jack. Hey, Jack. What's going on?
Hey, well, I just wanted to start it off by saying thank you for doing these streams, man. I've been like watching you on and off. I'm most curious on JNJ, so I don't know if you've got any thoughts on them. I feel like they've just been kind of slapped on their med devices.
Yeah, it's the stock I kind of know the best of all the companies that I've ever followed over the last 20 years. I've done J&J more than any other company. It's just a big lumbering company that's had a lot of problems, you know, growing with kind of their configuration. And it's never really had like a real leader that really knew what they were doing. It's just this very bizarre R&D structure as well. So like they've done fine. I think splitting off consumer was an interesting move. They should probably spin off MedTech too. And it's just a different business and it has nothing to do with pharma. And it, you know, in this day and age, conglomerates are very much not, you know, thought of as a positive kind of thing. You know, most people really don't want to do conglomerates. So, you know, it's one of these things where I bet they will spin off MedTech too. And then you're left with pharma and, you know, they have daratumumab, which is just this huge, at this point, liability because you have, you know, a huge chunk of the company. Let me pull up my model, but a huge chunk of the company in Dara, and Dara will go generic. So you're basically now exposed to biosimilar risk. And, you know, for the longest time, J&J was so great because there were no such things as biosimilars. It was just, you know, a great, you know, business model to not have biosimilars. But let's say you take away MedTech from J&J, now you're at 12 billion revs for this quarter, 3 from Darzalex, right? Another, combine that with 𝗓𝗡𝗏𝗃, that's 4, all going away off patent. Stelara, that's gone. So half of pharma is basically gone. Now Darzalex might have a little bit more time, but eventually it's going to go. And Remicade and Symphony are already gone. So like, what is going to carry pharma after Darzalex? You know, and Darzalex is relatively new, but it's still, you know, it's now starting to get 8 years into it. You know, you usually don't get more than 12 years at this. So by 2030, you know, what's going to happen to Darzalex? And now most of pharma revenues is out of there. So there's nothing really too great in the pipeline. I mean, they still have a lot of small molecules like Erleada. They have the PAH stuff they bought from Actelion. So they wasted all this money to buy Actelion. And, you know, they're not going to get anything out of that. They also wasted a lot of money on the deal to buy Intracellular, I think. So it's just like poor strategic decisions in my mind. And I don't think it's going to be J&J.
I'm curious, like, what your thoughts are investing in biosims. I know it's very much like a regulatory risk you're taking, but is there any good play out there? Because I love the idea of, like, you know, stealing drugs, basically.
Yeah.
Free revenue.
Yeah. I mean, it's not as free as you'd like. You know, we looked at it pretty hard. I think it's better for companies like Amgen that have like a really good manufacturing infrastructure that already have capacity. Whereas like we were looking at a biosim company the other day that's part of that Alvohec, that's part of like the Alvogen group. And like from a standing start to get all that manufacturing capacity and just like start selling is pretty tough. So like it's better for somebody who's already got a lot of manufacturing capacity, or like, you know, some of these like Korean companies like Samsung Biologics and
yeah, I saw that. But I can't open a brokerage
Well, they've also been like insanely expensive stocks. Like I used to be short these stocks, and they kind of have that like Korean manufacturing expertise, but like they're priced like an insane pricing. So I don't know that there's an obvious win. Like imagine doing a biosimilar, I think, to like 𝗥𝗍𝗘𝗢𝗥𝗡𝗦, 𝗦𝗏𝗔𝗥, like some of these more like $1 billion drugs. And that's what's going to happen. Like, because most people are targeting the Keytrudas and those types of drugs, Eyelea, et cetera. But like, why not target a drug with like $1 billion, $1.5 billion, $2 billion in revenue? And some people are doing that. I think that's probably going to be more successful than targeting, Stelara, which like 18 guys are going to make the biosim, and
then you're competing with all the biggest players because they all want to put something on the market.
Yeah, and it's like who can make biologics the cheapest, and that's
where Coherus got crushed.
Well, biologics are hard to make cheap because it's a very intricate process. You kind of don't want to skimp on it, and you got to make a process that's scalable, which is often very hard to do. So I don't know. It's a weird business for sure. Someone will get rich off of it. I just don't know who.
What thing I should know first if I want to do, for example, free cash flow or like deeper analysis of the company? And if you would tell me why is that the software companies have so low margins?
Well, I would look at the gross margins, and the software companies should have very high margins. So like, because, it doesn't cost a lot of money to make software, and the marginal software product is not too expensive. So if you look at Microsoft, which is, the biggest software company, their gross margin is 70-ish%, and they sell hardware. So like the normal gross margin is much, much higher. So like AppLovin gross margin is, 80-90%. So gross margin should be high. The net margins are often low for a number of reasons. Like if you look at Datadog or like one of these other companies, like Datadog has this very high gross margin, 80% gross margin. But you look at the net income and it's like almost zero. And the reason this happens is like there's a lot of companies that are still in the spend and grow mode. So like you can see like they're still spending a lot on growing their organization. So revenue.
For example, like HubSpot.
Yeah.
Yeah, sorry.
No, it's fine. HubSpot is a perfectly good one. I mean, I think for most of these companies, it's all about the revenue growth. If the revenue is growing, the stock does great. If the revenue is not growing, it's all over. And it's kind of one of these things where you're trying to achieve scale, and you're willing to spend money to do that, because when you have, huge revenue, then the scale will start to show up, and you'll have like, much better P&L. But it's kind of this weird thing. Like if you and me were going to run a business, we probably would think about it differently, where we were like, no, I want to be profitable. I don't want to be constantly, worried about my profitability. But think about it this way. Like one of the best ways to think about it is the cohort system. So if you think about like, let's say, I don't know if you're watching my screen, but let's say you start a software company. So imagine a company that, let's say we're going to call it cohort 1. There's 3 cohorts. Let's make 4, whatever. Okay. So let's say it's your first year of your software company and you sell 50 million. And of course, your cost of goods sold is small. That's just your programmers mostly. But your sales force is 40 million. And you have an operating profit of 5 million. Great. You have let's say your sales force is 30 million. You have an operating profit of 15 million. That's a nice little business. 50 million in revenue, 5 million in cost of goods. So that's cohort 1. If cohort 1 grows, let's say 20%, this is an even better business, right? Because it's, I don't know, they just use the software more or something like that. This price won't really change much. Your cost of goods won't change very much at all. And so your gross profit will be a little better. But what do you do with your sales force? You can keep your sales force the same. If you keep them the same, this will be your profits, right? So what you do is, let's take this on a scratch pad on the side, and say, I'm going to already make 25, 36, and 50. That's 111 million the next 3 years. I can basically borrow from this money if I wanted to and hire more salespeople because I know this is coming. Because software, mostly people renew their software. They don't, stop using software once they've started to use it. So you basically say...
Depends on the software. For example, Monday.com has a lot of turnover, right?
Sometimes, it depends on the kind of software. You have to fight the churn. You're not going to get to 50 million if you have churn. If you have churn, it's all over for you anyway. But
Okay.
you can also assume that it's not going to grow much, okay? And in which case, this number is more like 45. Fine. But the point is, I can now invest in my sales force. So I'm going to take half of that 45. Let's say I'm going to take 20. And I'm going to invest in my sales force. And my sales force, previously, when I put 30 million, they were able to generate 50 million. Okay? So that sales force will maintain that 50. These guys from the cohort 1 sales team, they're going to now try to sell more. So the existing software sales will stay flat, but let's say they can add another 10 million in revenue from them. And then I added 20 million in more salespeople. And so they should be able to generate almost as much. If 30 could generate 50, how much 20 can generate? Well, it's pretty easy. I divide this by 3 and multiply by 2. Oh, I multiply it by 20, I guess. 33. So this is cohort 2. And now you can see that I've been able to grow pretty substantially by doing this. But one of the things that could happen is that these results will be delayed. So for example, let's shift this a year. Let's shift this a year. And let's say, in fact, the sales are like this. And let's shift this a year and say the sales are like this. This is kind of what more of a software company normally looks like. It's great if you can instantly see productivity, but usually you have these costs that will result in delayed kind of reality. Sometimes it'll even be delayed 2 years.
Yeah, well, the whole accounting is basically backward looking, if I'm not mistaken.
Right, exactly. So as you add these cohorts, it can feel like, yes, your revenue is growing, but it doesn't feel like your profit's doing anything. And if I extend this to a third quarter and a fourth cohort, I'll still have operating profit negative, but my revenue will still be growing. But I know that each cohort is actually very profitable. It just takes time to actually get the salespeople trained, get the product launch. So you're always in this game of like, there's a core profitable business. Because again, let's say I take out cohort 2 and I remove cohort 2's costs, I'm very profitable in year 4 of cohort 1. But I have to invest in year 1 and year 2 of cohort 1. And so then year 3 and year 4 are very profitable. In fact, I have almost 50% margins in year 4. But it takes time before that sales force is trained and they can be effective. And in the meantime, I'm going to start investing in cohort 2 and cohort 3 and cohort 4. So that's kind of the idea, I think, behind why some of these companies like Datadog, who's been growing 20, 30, 40% a year forever, really impressive company, has gone from, 800 million in revenue to, now annually like 4 billion in revenue. And HubSpot as well. Or HubSpot is, I was talking about Datadog earlier, but roughly the same kind of economics. So